I'm Robert Graham with the Smart Stocks Online Talk Show. We are shining the spotlight on silver for this edition of the program. The last time we spoke with our guest was back in December of last year, and at that time, silver was trading at just under $30 an ounce. Today, at the time of this recording, about 4 months later, we have silver sitting at just over $32 an ounce. Is that a sign that the silver bull may be getting a little bit tired? Let's find out. Joining us on the line is David Morgan of silverinvestor.com and publisher of the Morgan Report. David, welcome back to the show.
Robert, great to be with you.
Okay, any surprise at all, sir, in how silver has traded so far this year? And should investors in the metal, believers in the metal, be a little bit concerned about the performance?
Well, I think there's a lot of people that are concerned with the performance. Personally, I'm not that concerned. Whenever you've seen the kind of run-up that we had last year about this time, where silver went roughly from the $26 level all the way up to 48, and a lot of my compadres were saying that it was just going to continue to go up, take out the $50 level, move to 100, liquidity split, etc. And I called the top on that around the $48 level. I think I was about 2 or 3 days from the ultimate penny top, but well within the range of the very top. And it's taken a long time since then and has not even gotten close to that level. And it's consolidated a couple times and continues to consolidate. I think we still have more work ahead of us. I think we probably got another 3 or 4 months of consolidation before we see any real, the bottom is in, so to speak. Not that it's going much lower than it is now. But it wears people out, especially people that got in at 35, 36, 40, 45 last year and expected it to go to 100 within weeks of the time that they bought it. Now it's a year later, and they're frustrated.
Yeah, I'm wondering if the trade in U.S. large cap equities, David, could be reducing some of the desire to own silver right now. The S&P 500 index in the first quarter shot up about 12%. That was its biggest first quarter percentage gain in 14 years. A pretty attractive rise, no doubt. And the iShares Silver Trust, if you wanted to play silver through that vehicle, has underperformed equities over the past year or so, I believe. So equate for me the performance of equities versus the performance of silver, and are stocks proving to be a little bit of a siphon off the silver interest?
Well, I agree that I think stocks currently have probably taken, especially on the managed money side, some of the shine off of silver, excuse the pun. And secondly, gold is the most negatively correlated asset to the stock market, and that's gold, not gold shares. Silver is 84% correlated to gold, so both of them trade pretty much the same most of the time, which implies strongly, with that logic, that it's going to do the opposite of the stock market, and that is basically what's been happening. It certainly has been underperforming. I think the stock market, personally, has probably got a bit more upside, but not much. I think it's really, not that fundamentally sound at these levels. However, that doesn't, the market doesn't care what I think. The market's only going to do what it's going to do if there's more buying pressure. And I know a lot of people that are even in the gold sector aren't necessarily throwing in the towel, but they're stating just what you stated, Robert, that these equities look pretty good here, the recovery is on, things are getting better, I don't need as big a position in the metals, I probably put too much in them, I think I'm going to sell them off and put my money into the equity market.
Okay, well, just prior to this interview, David, I was on your website checking out some of your writings, and they include the following quotes. As we brace ourselves for the final chapter of a U.S. dollar currency crisis, silver has a long way to go, and referring to the metal itself, you state buy, and buy some more. So obviously putting those that quote in context, that's a little bit more of a longer-term view, isn't it? You're not talking about the next 6 months or so in terms of saying get out there and buy a lot more silver if you can. You're taking a longer-term view.
Absolutely, and it's reference primarily to the study that GFMS Philip Clapwick put out recently, which a lot of the mainstream media has picked up, which basically says, you're going to get one last chance to get out of gold. It's going to be 2013. It's going to be early. It's going to be about $2,000 an ounce, and you got to sell then. And if you don't, you're going to have to wait about 20 years for it to come back to that price level. I couldn't disagree more. I don't think that that's the top, and I don't think that's the year of the top. I think that the top is going to be very similar to what happened in the 1980 time frame, And that is where everybody, and I mean everybody that's awake, is going to be trying to get in the metals in one shape, way, or form. Not necessarily gold coins, but gold stocks, penny stocks, mining stocks, that kind of thing. Anything with gold in its name, anything with silver in its name. We weren't even close to that, and I don't think we're going to see that probably until the 2014 to 2016 timeframe.
Okay, so certainly lots of upside potential. I guess when we put your comments in context, what you just said, is this a good time for people to increase their exposure to silver and gold?
It is. I really believe that. I mean, I'd rather be 6 months too early than 6 minutes too late.
Right.
Once you're in this market, you have a position. And the thing is, it depends on the investor. I mean, what I teach is most people should have about a 20% exposure at the most. The Ibbotson study, which is an objective study when the best portfolio analysis is available, uses 15%. So let's say you have your 15%, and let's say you had it 5 years ago. As the metals have increased from 5 years ago till now, you're still looking at healthy gains. Maybe that makes up 25% of your portfolio.
Sure, right.
Well, you're supposed to rebalance. You're actually supposed to sell off a little bit of that gold and silver and keep it at 15% and move that money somewhere else. So I'm not of the ilk that you put everything you own into gold and silver and wait for the end of the world. The world's going to go on. It's not going to end. And there are always opportunities, and they're not, in that class necessarily. I still think, I don't want to contradict myself. The bull market in the metals is far from over. But again, I think that there's more, tough sledding ahead.
Sure. Quite often, David, the issue of demand from India is mentioned when during discussions about gold. I'm wondering how big of a role that country plays in determining the price of silver. And I'd ask you that because I've read a recent report that states silver imports into India are expected to drop by as much as 27% because of volatile prices. This is a Reuters report quoting an official from Scotia Makata. What do you think of that?
Well, that could be accurate, but has very little effect. What most people don't understand about India and silver is that the silver that goes into India never comes out. I mean, very little comes out. To say none or never, of course, you're incorrect. But for all practical purposes, they're an import-only country. Some does get exported. It's usually smuggled out, and there are some exemptions that are allowed under Indian law to get silver out of the country legally. But it doesn't really bother me that much. I think I see those things come up from time to time, and rightfully people get excited because it sounds like it's going to have a huge impact.
Yeah.
It could, but I've seen that same type of reporting over the 40 years I've been in this market. And my first decade or so I was in this, and I see stuff like that and get all excited and think, oh my goodness, what's going to happen? My experience is it's a bunch of hot air. It's not going to have any meaning whatsoever. Could be wrong. I doubt it.
Okay. In wrapping up then, people, you're basically saying don't pay too much attention to these types of stories that are out there. What should they really be focusing on then if they want to be on the leading edge of getting the most out of any dollars they put into precious metals at this time?
Focus on the fundamental facts. Keep it as simple as possible and know it's objectively true. The fact is that there's never been a fiat currency in the history of mankind that's ever survived. That's a fact. Two, what has been the one asset class that has always worked in those circumstances, and that's precious metals. And three, do you have the right amount or not? So I think if you answer those very succinct, very concise, very precise questions for yourself, and you don't need the influence of David Morgan or Robert Graham or anyone else, I'm here to help you, and you do the same thing, Robert. But basically, get solid. As I like to end most of my videos, get real, be real, buy real. I mean, just, only you know what your circumstances are precisely, and only you know what makes you comfortable. But if you own too much gold right now and you're uncomfortable, well, that's, you're letting yourself know. I personally am over-invested relative to what the recommended percentages are, but it's my livelihood. It's the sector I know the best, and I've also been through these type of markets before. So for me to wait another 4 months at my age is like so big deal. You know, I'll just have to be, you know, I'll be on my third barbecue party by then or something. I'm not going to worry about it too much.
Well, heck, you just bought a German Shepherd puppy, so that kind of says something, doesn't it?
It does indeed.
Okay, great way to wrap this one up, David. Thanks very much for this. And, great to speak with you, and we'll connect again later this year. Appreciate it.
My pleasure. Thank you, Robert.
Okay, that is David Morgan of silverinvestor.com and publisher of the Morgan Report. You can find him on the web at silver-investor.com. And to get all the latest analyst and CEO interviews from Smart Stocks, make sure your contact information is on the Smart Stocks e-alert list. We invite you to fill out the form on the Smart Stocks website. I'm Robert Graham, and you've been listening to the Smart Stocks online talk show where companies come alive. For more corporate interviews and analyst insight, visit us online at www.smartstox.com.
Buy real, get real, be real.